All right, good evening and welcome, guys. Once again, so we are talking about the fundamentals of blockchain technology and crypto assets. So yesterday we spoke about the history of money, the history and the evolution of money. So we're just going to recap what we will cover in this masterclass. We've got 9 different sessions. We spoke about the history of money today. We're doing the intro to blockchain and Bitcoin. We'll see how far we go with that, if we're able to finish that in 1 hour, and then we'll take it from there. Then after that, we're going to talk about smart contracts, which is the technology that allowed for the creation of decentralized finance. We're going to talk about different decentralized finance ecosystems. We're going to talk about NFTs, the metaverse and meme tokens. What are those and what are their use cases? We're going to talk about the tokenization of real-world assets. We're going to talk about the 5 different ways. I say 5 here. There might be more, 5 different ways to make money in crypto. And we're going to talk about how to create a cryptocurrency portfolio. And then we're going to look at different wallets, how to set them up, how to interact with decentralized exchanges, how to interact with even IDOs and stuff like that. So there's quite a lot that we're going to look at in that session number 9. So yesterday we spoke about the history of money, the fact that we started with the barter system. We had salarium, we had coinage system, we had seashells, paper money. Today we're going to talk about plastic money, e-money, and then the rise of cryptocurrency money. So the barter system made transacting immediate, and everything was finalized immediately. But the only problem is that it actually stifled the economy. It stifled. You could only interact and exchange goods and services with people that are in your immediate vicinity. But then in terms of, you transacting with people that are far and wide, it made it, very difficult. And that is partly where the coinage system came from. We even made an example of where the story in the Bible came from, where Jesus, took out the whip and hit everybody because these guys were actually sold their animals, took them to the temple, the money to the temple, and then rebought the animals for the sacrifice and all of those things. So we spoke about the fact that the issue of counterfeiting money actually started with coins, whereby they would either put in a coin with an inferior metal inside and cover it with the metal that has got more value, which is gold, right? And also they would actually clip out the edges of the coin to actually create another coin, therefore reducing the weight of the original coin, right? So counterfeit already started as early as in the coinage system. Then we talk about how the paper money was created. The fact that China was actually the pioneers of paper money. 400 years later, only Europe did they jump onto the bandwagons. We spoke about the fact that originally paper money actually came from the banks keeping your gold and then in return giving you a certificate, which you can actually trade the certificate. That's how money was actually born in terms of paper money. And then from there, we spoke about the fact that, the money as we know today, it's not backed by anything. It's not backed by gold. It is fiat, as it is called, because it's not backed by anything, right? We spoke about how the US government actually, tricked the entire world and took the US dollar off the gold standard in 1971, which is what gave us what is called fiat currency today, right? So the reason why we had 2008 financial crash and everything that goes with that is exactly how money gets created, okay? The fact that money is not backed by anything. So yesterday we stopped right here, which is the rise of credit money or plastic money. And we said that the interesting thing with the evolution of money is that all the innovation, they do not come from the government. They do not come from central banks. They actually come from the marketplace, right? Because remember, money is simply what we agree that we will actually exchange value for, right? It's what we agree on. That's what is currency, right? So that's where money comes from. So if you look at the plastic money, right? It originated in the 1920s coming from the oil companies. I remember there was a resurgence of this in the early 2000s where people had a garage card. So you have a garage card that you can use to put petrol, anything you do with your vehicle, right? I remember this was almost a hit, but then it quickly died down. People realized that you can actually use your own debit card for this, right? So anyway, this issue of plastic cards originated with the oil companies, right? With Chevron having their own cards where people can actually put in money, and then this then can be used to actually pay for petrol, oil, and everything related to servicing your car. It was only in the 1950s where we had the first, credit card that is not originating from the oil companies, which was the Diners card. The Diners card still exists even today. It's still exclusive even today. And then from there, only in the 1960s, we saw Visa coming onto the market. And then also Mastercard also came into the market. And then in the early 1970s, this was then used, to purchase daily with different shops and stuff like that. So this kept on growing up until the year 2010, where they introduced the chip technology, right? Which is what we see today on our either your SIM card or your credit card. Okay. Now, what is interesting with this is that when you look at your bank card, let me tell you something about your bank card. Your bank card has your bank name, then it has a Visa or a MasterCard. Do you know who owns your bank? Sorry, your bank card? Do you know who's the issuer of your bank card? It's not your bank. They don't have the technology. It is actually Visa or MasterCard. So when you're swiping using your debit card, guess who gets paid? Your bank and Visa or MasterCard. Okay? So your bank doesn't really own the card. They just issue you the card. So it is actually owned by those institutions. Okay, so this is where we have the debit cards. So, and then we said we were going to speak about how big is money, how much money is in the world. Remember, we spoke about the fact that 93% of all the money in the world is digital, and only 7% is actually notes and coins. Now, there's approximately over $40 trillion in circulation today. So that would be 97% digital, 30% notes and coins. Okay. Now, but over and above that, remember we said money is a base layer of the financial system. Okay. Over and above that, you have other investments, things like derivatives, you've got cryptocurrencies, you've got debentures, you've got all sorts of different monetary instruments that are issued on top of the base layer of money, okay? That is 1.3 quadrillion, right? So a quadrillion is actually 1,000 trillions, okay? So now what is interesting is that the global balance sheet, meaning the assets, that the world actually has, between the year 2000 and the year 2020, it actually grew by over 440 trillion, right? So that's about 13.2 times, its GDP, right? And then in the year 2000 to 2020, it rose all the way to 1.5 quadrillion or 1,500 trillion. That's quite a lot of money, guys. So there is a lot of money in the world. Too much money is in the world, actually, right? Now, then if you look at the Forex market or the foreign exchange market, and this is just simply countries, companies, people who are either having business where they're generating money from one part of the world, and the currency of that part of the world is the US dollar, the Chinese yen, the South African rand, the Indian rupee, whatever the case is, right? And then those people either have to go and buy stuff from other countries, or they actually originate from other countries. So there's always this exchange of me selling the US dollar to buy the rand, or me selling the rand to actually buy the British pound for whatever reason or purpose, right? And every single day, the amount of money that does this sort of exchange is actually valued at between 6.6 trillion all the way to $7 trillion every single day. So you can imagine the people who are owning the infrastructure on which these particular transactions are taking place on, not the people who are trading. I'm talking about the people who own the infrastructure. Because once you own the infrastructure, it simply means that when $1 is moving this way, somebody's making money. When $2 is moving this way, somebody is making money, right? But if you're trading, you could be making or losing money, right? But if you are owning the platform, it just simply means that, whenever there's a passage of money from this way to the other, someone is making money. So one of the things that I'm very, very passionate about when it comes to cryptocurrencies, I wish that people could stop thinking about buying this coin, having it go up, and that's the only way you get to make money, right? Yes, that is one of the ways you can make money, but there's also other ways. How about we think about becoming entrepreneurs in this space, whereby we find different ways of how we can get in, right? This opportunity for us to do so is actually closing in, right? Because before government started regulating crypto, it was open to everyone. But when government started regulating crypto, it was not to protect you and me, right? They might tell you that that's the case, but it's not to protect you and me. It just simply means that it is there to have the legal right or the legal loophole or the legal it just allows companies, big financial institutions like banks and other insurance companies, it's just simply there to allow them to be able to operate. Because remember, those institutions are actually governed by legislation. So therefore, they are not able to play outside of any asset that's not legislated. That is why they actually literally forced the government to actually put legislation in place so that they're able to play in this space. So if in the next 3, 4, 5 years, this is what you're going to see. In the next 3, 4, 5 years, you are going to see all banks in South Africa having one form or the other cryptocurrency play. Whether they're going to offer custodial services, whether they're going to allow you to trade cryptocurrencies or to buy cryptocurrencies, but they will have their own cryptocurrency play, right? I can tell you right now for free, African Bank is working on having their own cryptocurrency exchange. I don't know when it's going to come out, but it is actually going to come out in the future. I know Investec is working on their own project. Standard Bank is working on all the banks. They're working on their own projects. By the way, Old Mutual started investing into crypto as early as 2017. Why? They have a fund that actually allows them to invest into other speculative instruments, right? And that fund actually started investing into Bitcoin as early as 2017. This you can Google, okay? So then you've got the cryptocurrency market. It's only valued at $1.7 trillion today. It's not going to be like that forever, okay? Because most of what you are seeing here is actually going to move onto the blockchain. And once it moves into the blockchain, it's actually going to come and fall under this category. So when you talk about real world assets that are going to be tokenized, right? We'll talk about what that means when we get to that subject, but it simply means that everything is going to go under the blockchain technology. Everything is going to be fractionalized, okay? Guys, how's my sound? For me, it sounds terrible. I hope you can hear me good. All right. So when it comes to fiat currencies, thank you so much for that. So when it comes to crypto fiat currencies, guys, there is the major shortcoming. So think of it this way. You go to work, what you earn money, right? Fiat, rent, dollar, whatever. You earn in fiat, okay? So money is simply a store of energy. It's a store of energy. So if you're earning 10,000 rands, right? The whole idea of money is that you earn this money, you keep it somewhere so you can use it the following day or the other day whenever you have need, okay? So the whole idea is that this money should actually hold buying power, okay? Because if it's not holding buying power, it just simply means that it's robbing you of your labor and of your energy, okay? So it's like Imagine you are going to fetch water from the river and you've got a bucket, okay? It's a lot of work to go to the river. It's a lot of work to get the water. It's a lot of work to carry the water up, maybe the hill or whatever the case is, into your home. So imagine you do this, you go and get the water from the river, and then you fetch the water and you go all the way home. But when you get home, your bucket is no longer full. It's actually half empty. The rest of the water actually spilled as you were walking up. That's what it feels like to save money in fiat, okay? In fact, if we were to do a quick exercise and you to look at what you used to buy, your grocery basket, right? Look at milk, sugar, eggs, flour, potatoes, meat, all those things that you normally buy in your grocery basket. Look at what they're costing you today and look at what they cost you 12 months ago, just 12 months ago, not 10 years, just 12 months ago. You will find that the difference, if you were to Google right now, what is the official inflation rate? I think the official inflation rate right now is probably sitting at around 5. Let me see if I can annotate. It's probably sitting at somewhere around 5%. Okay. You know what they're saying with this? They are saying your 100 rand right now, right? Or 100 rand that you had 12 months back. It means that, sorry guys, I need to open for someone. This is my internet guy. Sure. Sure, I'm late. Sure. Sorry, guys, this is my internet guy. He was supposed to be there at 2 o'clock. He's only coming in now. That's why I'm actually doing this meeting here. Sorry about that. So what they are saying with the official inflation rate, they are saying to you that if you had 100 rand 12 months ago, right? If you had 100 rand 12 months ago, okay, great stuff. If you had 100 rand 12 months ago, right? And just want to remove this. Okay, if you had 100 rand 12 months ago, today that 100 rand can only buy you 95 rand worth than what it could buy you 12 months ago. How many of us know that's a lie? What 100 rand could buy you 12 months ago, probably today, you could only buy 50 rand worth of your groceries, your normal basket that you normally buy, okay? So how do I know this? I studied quantity surveying, and part of what we do as quantity surveyors is that whenever someone prices a tender today with today's price rate, and they only go to site 2 years from now, we then need to escalate, right? The cost of those goods, when this person is going to site and the cost of labor, so that we allow for that adjustments in their payments, okay? So this is I had one of the woke lecturers who literally told us the truth, right? And this is before me learning about Bitcoin or how money gets created. And this is what they told us. They said, you've got two inflations. You've got the official inflation rate, you've got the real inflation rate. The interesting thing, they said, if you want to know what the real inflation rate is, ask a woman who does groceries and who takes notes. They will tell you that this carton of milk, this time last year was 12 rand, today it's 17 rand. That's not 5%. Okay? Even things like rent, they normally increase by 10%, never 5%. Do you know what the official inflation rate is there for? It's there to negotiate your salary. Because your salary at the end of the year is not negotiated on the real inflation rate, it's negotiated on the official inflation rate. So the next time you see Amba comrade saying we are actually fighting for 20% increase, but they only settled for 7% or 5%, and the employer was offering 2% or 3%, and they think they won, they haven't won nothing because you are still below the real inflation rate. So anything that you have that's allowing your money to grow at less than or just above the official inflation rate is not really helping you. You actually need your money to grow at maybe 5 times or more the official inflation rate. That's what you need. Then you are getting ahead, right? Anything less than that, you are not getting ahead. You are actually moving behind, but without you knowing it. Okay? So, and what do? They change how you can qualify for credit so that it helps you to feel like you're moving forward. Now, all of a sudden, that car that I want, now I can buy it using a balloon payment, right? And I feel like, yeah, I'm making progress, because now I'm driving this car. I used to drive this car, or I had no car, but yet literally I cannot afford the car, right? But it is what it is. So let's now get into session number 2, which is where we are doing an introduction into blockchain technology. So before we get into blockchain technology, there's actually something called good qualities of money, right? Good qualities of money. Every good economist out there will tell you why this is important. What makes good money, right? How do you decide which is good money? So over the years, everything that you have used as a form of money, the only one thing that really came close to ticking all the boxes here was gold. Everything else was actually could not tick all the boxes. Now, Bitcoin is the only form of money that ticks all the boxes. Okay. So, what was the shortcoming for gold? The shortcoming for gold was the fact that the smallest denomination of gold you can get is 1 gram. Remember, I told you that I used to invest in gold. I've got a few 1 grams, right? So that's the smallest denomination you can buy. But then if I want to buy something that's going to cost me, let's say 0.5 gram, how am I going to get, interest? Sorry, guys, my internet guy is phoning me now. Chef, I'm in a meeting. What's up? Oh, okay. Let me phone the wife. Sure. Unmute. Okay, sorry about that, guys. She's not picking up the phone. Let me send her WhatsApp. Right. So these are the 8 different qualities of good money. For money to be, it only makes sense, right? For money to be good money, it has to be generally accepted by everyone. Okay. And also it should be portable. So you should be able to carry money with you wherever you go. So if you want to be able to transact with other people from other parts of the world, you should be able to do so. Money should be durable, meaning the material used for money should actually be able to last long. That is why if you look at the paper that is used for money, it's different than other normal papers, right? They put some stuff on it, but it's obviously not perfect, right? Because I can be able to tear it apart and stuff like that. And over time, if it's exchanging hands over time, it does actually tend to wear out. But things like gold, they don't necessarily wear out. It has to be able to be divisible. Now, what I noted in America, in South Africa, we've got 10 cents, we've got 20 cents, 50 cents, and so forth, right? In America, they just have the quarter, so a quarter is like 25 cents, literal, but in one coin. Okay, so. And then also money has to have homogeneity, which means that if I look at 200 rands, there shouldn't be any difference between the two, right? They should actually look exactly the same. Okay. And then when it comes to cognizability, it just simply means that it's very important that if I'm looking at the 100 rand, right? The 100 rand one, obviously, yes, should look like the other one, and also should actually hold the same value, right? So 100 rand should buy what the other 100 rand can buy you, right? And then stability, money should not actually lose its buying power, in a short space of time, even though it does over a longer period of time. But good qualities of money is that money should not lose, its buying power, right? It should be relatively stable. You mustn't wake up one day, a rand can buy you this much, the following day can buy you this much. So it should relatively be stable, right? So before Bitcoin actually came into being, there were different attempts at creating this perfect money. We've got things like DigiCash that was created by David, which was one of the first digital currencies to use the private key function, which we're going to talk about. There was also eGold, which was a gold-based digital currency. It had over 2 million users, right? But it was hacked and it eventually died down. We had web money, which was created in Russia. I think this one actually still exists even today. And then we had the Liberty Reserve, which was a popular payment processing platform that was utilized by millions of people. All you needed here was just an email address, your date of birth, and your name. And then obviously the government shuts it down, right? And then we had BitGold, which is also another digital form of money that was backed by gold and silver, which would allow you to use this particular type of currency to buy gold, to buy silver, and stuff like that. And it was also using something called proof of work, which is the technology that Bitcoin basically uses currently. Okay, so what were the situation and things that led to the creation of Bitcoin? So all these previous attempts that you see, it's showing you that the world knew that there was something wrong with the current form of money. Or when I say the world, I'm talking about certain few individuals who could see that there's actually something wrong with this form of money. And obviously, these are people who are not the incumbent. These are people who are not benefiting from the status quo, right? But they're looking at this and they're like, this actually needs to be fixed, right? And whenever someone tries to do something, the government will come, shut it down, get those people arrested, and so forth, right? So, but then in 2008, we had the Lehman Brothers collapse, which actually created the world economic crisis, right? Whereby this was led by the collapse in the banking system, right? Now, the situation that basically led to this, there is a documentary on Netflix called The Big Short. The Big Short, right? Short as in SHORT. Now, if you watch that movie or documentary on Netflix, it will show you all the different events that basically led to the world falling into a crisis. The interesting thing is that even though these were few individuals, who were tasked with different things, and they led the world to having the world economic crisis, Not one single person was arrested. In fact, people got bonuses, right? Instead of being arrested for what happened in 2008, which is very interesting and also quite telling, right? So rating agencies were also involved there. Banks were also involved there. There was quite a lot of other regulators who were also involved there, which actually led to that, right? So what happened and what was the solution? So there is a group of a mailing list for people that believe in cryptography, right? They believe in the power of cryptography because some of the previous forms of money that people tried to use, they were actually using cryptography, right? So these people believe that we could actually use cryptography to create an alternative currency that's not going to be stopped by any government, that cannot be censored by any government, that can be independent. But how to actually create that, it always remained a mystery, right? You solve one problem, there was another problem that arises, right? So they never really, cracked the code in terms of putting all of the technology together to create something that was actually going to work, right? There is a professor by the name of Milton Friedman. In the early 1990s, this guy actually predicted that there will be a new digital currency in the future, and the reason why it's needed is because of ABCDE, and this is how it will actually work, right? So on October 31st in 2008, the Bitcoin white paper emerges. How does it emerge? Someone or a group of people, nobody knows who this person is or this group is. A group of people known by the name Satoshi Nakamoto released a white paper. So think of a white paper like, if I'm going to build a house, what do I need? I need plans, right? So the plans would show the dimensions. They would show when the windows are going to be. They would show what the foundation is going to be look like. So the plans show everything. So the builder doesn't have to go inside and say, where do I want to put the window? It's already on the plans. Where do I want to put the door? It's already on the plans, right? So the white paper was exactly a document that was showing how Bitcoin was going to work, how everything was going to fit together, and so forth, right? So now the title of this white paper was called a peer-to-peer electronic cash system, right? So actually, I will send this document in our group, and I want you guys to please read it. Even if it doesn't make sense, just read at least the abstract, So the abstract is like the first paragraph that gives an overview of what is contained in the document, okay? So this white paper was sent to a group of cryptographers called MetDAO. And some of those people believed this could work. Some people did not believe it could work, but there were people who believed it could work. And these people started working with Satoshi Nakamoto to create this network that we now call Bitcoin. Some of those people are Hal Finney, Nick Szabo. There was many other big computer scientists who basically worked with Satoshi to make this a reality, okay? So Satoshi solved a very important puzzle in which all these other people could not be able to solve. This was called the Byzantine general problem, okay? Which is, how do you prevent double spending? Because remember, if I send you a picture or any document in a digital format, when I send it to you, you have a copy of that document, but I simultaneously have a copy of that document. So if I send it to 1 million people, there will be 1 million copies of that document, even though I still have the copy myself. But this cannot work with money. Imagine if you've got 10 Rand, but every time you spend it, you still have the 10 Rand. Okay, and this is what Satoshi Nakamoto stopped, or with the creation of Bitcoin and with his blockchain technology. So on the 3rd of January, after 31st of October, everybody working on the document, working on this network, 3rd of January, the network of Bitcoin went live. It has been live from that day up until today, 24/7, 365, no outages. How many times have you gone to a bank and you're told you're offline? Bitcoin has never been offline, never been offline. Yet it has no CEO, It has no managing director. It has no building. So it was created in such a way that no government can stop Bitcoin. If they could, I promise you 100% they would have stopped it. They would have stopped it dead on its track. One, they didn't know who Satoshi Nakamoto is. So you can't go there and say you're going to arrest this guy for what? You don't know who he is. You don't know where he stays, you know? And number two, this thing is so decentralized that it's everywhere, every time, and you cannot destroy it. You know, there's no building that you can say, if I shoot a bomb on that building, then Bitcoin is done. There isn't, right? It's everywhere, okay? So now the Bitcoin network was live. The first block of Bitcoin was mined by Satoshi Nakamoto. This is what is called the Genesis block. Now, what is interesting, for those people that don't want to know as to why Bitcoin was really created, why this entire ecosystem started, Satoshi Nakamoto actually put a note on the Genesis block. And this note actually read the times. And then 03 January 2009, Chancellor House on brink of second bailout for banks. So what he was saying, this was a real article on the newspaper talking about Chancellor House in the UK, that they were actually preparing a second bailout. And did the banks actually created the financial collapse? What did the government do? Did the government punish the banks? No, they actually gave the banks money. Okay, why? Too big to fail. Yet the Lehman Brothers did fail, right? Too big to fail, right? So the government actually was literally complicit, right? Because they helped these guys. Okay, so this was really a clear message to say that we really need an alternative, and this Bitcoin could be that alternative. Now, a lot of people thought Satoshi or Bitcoin was created to stop fiat. Remember what I said? I said, with every new form of money, it does not necessarily kill the old form of money. The old form of money still exists in one way or the other, but it doesn't really kill it and destroy it altogether, because human beings don't like change. Okay, change is uncomfortable. So that is why, I think even 10 years from now, 20 years from now, 50 years from now, we will still have some form of barter system. We will still have some form of fiat currencies, right? We might not have it in paper form. We might have it in a digital form, but we'll still have fiat. Okay, it's just that Bitcoin is going to exist, and the cryptocurrency market is going to exist as an alternative asset class. That's what the governments are saying. That's what these big financial institutions are saying, that it's an alternative financial system or asset class. Okay, but it's way much bigger than that. It's money. Are we together so far? If we are still together, please type a 1 in the comment section. Okay, Tembega types 2 when I ask for 1. Where are we leaving you behind, Tembega? Or you wanted to press 1? Okay, so what is Bitcoin, right? So remember, Bitcoin was the first cryptocurrency, right? And Bitcoin was the first cryptocurrency, and with this, it proved that this can work. That is why today we've got over 20,000 cryptocurrencies, all because of Bitcoin. Okay, so Bitcoin can basically be summarized this way. And for me, this is the most important part, okay? Understanding Bitcoin. One, Bitcoin is a currency. What do we use the currency for? To exchange goods and services, right? You are selling a phone. I've got money. I can give you my Bitcoin as a currency, and you can give me the phone if we agree, okay? So Bitcoin is a currency, meaning we can use it to buy goods and services. In fact, the very first car company or vehicle, a company that sells cars to accept Bitcoin, it was actually a Lamborghini dealership in the USA. A Lamborghini dealership in the USA was the first one. Right now, you can pay for anything using Bitcoins, right? Because you can either pay directly, use from your wallet to the other wallet. You can have a debit card that you can use. The infrastructure is so big, right? Where you can use Bitcoin as a form of money, as a form of currency to pay for goods and services, right? So that is number one. And then number two, Bitcoin is a commodity. What does that mean? Commodity means that Bitcoin is scarce. You're not going to find it everywhere. There's only a limited number of Bitcoin. And as a result, the growing demand for Bitcoin, makes the price of Bitcoin to go up. Therefore, it's a commodity like gold, like silver, and many other commodities, right? So, and then number three, it is also a payment system. Now, in the olden days, right, or in fact, in the fiat world, if I need to send money to someone, who is not in front of me, I need a trusted third party. If someone is in Cape Town, I'm in Joburg, I need to send them money. It's impossible without using a third party. And this third party is called a trusted third party because this person can either stop the transaction or can prevent the transaction. So even if it's money, it's notes, and I give it to a taxi driver and I say, you're going to drop this at so-and-so, at such and such a place, someone is going to come and get it. That taxi driver is a trusted party. If I'm using e-wallet, right, that's a trusted third party, it's a bank. If I'm doing EFT, that's a trusted third party, it's a bank. So all these trusted third parties can actually stop the transaction if they want to. Now with Bitcoin, I can actually send money to anyone, anywhere around the world without needing a third party. So in the history of mankind, we've never really had one form of money that is all these three things, right? So whereby it's a payment system, it's a commodity, and it's a currency. It's either it's going to be 2 or 1, but never 3. Bitcoin is the first one that is able to be all 3 in one. Okay, this is what really makes Bitcoin special. So the main properties of Bitcoin, the main things that make Bitcoin special. So right now, what you will hear is that the governments are working on what is called central bank digital currencies, or CBDCs, right? They're going to tell you these are going to be digital. People are blowing up these cash in transit highs and so forth. Therefore, we need a digital form of money. Let me tell you right now, that is a trap. That actually deserves a whole new session on its own, right? It's a trap, guys, okay? But we'll talk about that later. So Bitcoin is peer-to-peer, meaning it can be sent from one person to the other without needing a third party. It utilizes the blockchain technology, which you're going to explain what that is right now. And number 3, it is decentralized. There is no Bitcoin CEO. There is no Bitcoin company. There is no one that owns or controls Bitcoin. It's just a protocol. Think of the internet. Who owns the internet? It's definitely not Google. Google is simply a company that allows you to search the internet. Okay? Is there an internet CEO? Doesn't exist. Is there an internet building? It does not exist. Right? The internet is just simply there. It's a protocol. Okay, so Bitcoin is deflationary because there will only be 21 million Bitcoins to ever exist. All right. So how is it that Satoshi Nakamoto was able to create Bitcoin to be deflationary? So number one, he coded it in such a way. So when I say there will only be 21 million Bitcoins, it does not mean today in circulation, there's 21 million Bitcoins. I think we're sitting at just over 19 million Bitcoins right now. Right? So there's still a couple of more Bitcoins to be mined, right? But every single day, every 10 minutes, there's new Bitcoins that are added onto the market. Now, even though these Bitcoins are added every single day, we will never exceed 21 million because it is all pre-programmed to issue X number of Bitcoins every 10 minutes. And then as time goes on, this new number of Bitcoins actually decrease over time, so that we will only get to 21 million Bitcoins by the year 2140, 2140, right? That's over 100 years from now, okay? So So how are these Bitcoins coming into circulation? They come into circulation via a process that is called mining, right? So what are miners? Do we have people going underground looking for Bitcoin? No, we actually have got specialized computers that are actually used to run the network of Bitcoin, right? So what these computers do, number one, they verify transactions, they secure the network of Bitcoin, right? And for this, they get rewarded with the newly generated Bitcoins. This is the process that is called mining, okay? So how is that Bitcoin is deflationary? As you can see, the supply is going down, but there's actually something else happening over the years, and that is the supply of Bitcoin is going down, but the demand is actually doing this. But sometimes it does this, and then it does this, right? So, and if the supply is doing that, what do you think the price is actually doing? The price basically follows exactly the same pattern. So the reason why you see Bitcoin going up and down, it's simply because of this, right? Supply and demand, all right? So for me, this is how I was introduced into Bitcoin. I was introduced into Bitcoin through mining, right? So I used to mine Bitcoins. I've actually been on two Bitcoin mining facilities. One was in Iceland, the other one was in Kazakhstan. Okay, there's lots of big mining farms, but when this thing started, you could literally mine Bitcoins with your own computer, right? This was back in 2009 and 2010, right? But as more people get to mine Bitcoins, there's something that is called mining difficulty, which is automatically adjusted based on the number of computing power that comes onto the network, as I said, to verify transactions and also to secure the network, right? So that we don't get to mine more Bitcoins per 10 minutes, all right? So it auto adjusts itself. Right. So the monetary policy of Bitcoin is very, very different from the monetary policy of the rand, the US dollar, the Chinese yen, the British pound. Okay. One, Bitcoin has got a fixed supply. Do we have a fixed supply for rand? No. Do we know how much rand is going to be added onto circulation next year, 20 years from now? There's no way of knowing that. Is this a transparent process where everybody gets to know how money gets created? No. Is this consensus driven? No. The Reserve Bank, together with the commercial bank, those are the guys who basically decide, right? Is money durable? Not necessarily. Is Bitcoin durable? Yes. It's very hard to counterfeit Bitcoin. All right. It is highly portable, meaning I can have Bitcoins here that are worth 1 billion rand, and nobody will even know that I've got Bitcoins here that are worth 1 million rand. I can travel all over the world with those Bitcoins, and nobody will even know that they basically exist there, right? So it is resistant to counterfeit. It is highly divisible, because maybe let me explain this, because it's very, very important, right? So this is one Bitcoin. One. Remember with the rand, let's make an example with the rand, right? So the rand would be 1 rand, and then there will be 2 decimals after the rand. That's the rand, okay? With Bitcoin, you've got 1, and then you've got 3, 4, 5, 6, 7, 8 decimals after the comma. So even if one full Bitcoin is actually worth 10 million rand, I can still buy coffee with Bitcoins. It will just simply mean that I'll be spending a 0.0000001 of a Bitcoin, right? So everything after the comma, these are called Satoshis, okay? These are smaller denominations of Bitcoin. They're called Satoshis. Right. So again, it seems like we are going to go beyond the 4 days that I wanted, because there's quite a lot to talk about, and we're already running out of time already. So as I said, guys, the 3 pillars of Bitcoin is peer-to-peer, cryptography, as well as blockchain technology, right? So what is blockchain technology? So in a nutshell, blockchain technology is what the internet is to email. So without the internet, we wouldn't have email, right? So internet makes email possible, but it's not email itself, okay? So email is not internet, but the internet what enables email to exist, okay? So it is simply a big data system on top of which you can build applications. Currency, which is money, it just happens to be one of them, right? So blockchain allows consumers to connect directly with one another without needing a third party. Remember what we talked about, just a moment ago? And so blockchain technology is not just about money, it is also, it's a database that records the transfer of value. That is why we can put title deeds on the blockchain. We can put traffic fines on the blockchain. We can put medical records on the blockchain. There's a lot of stuff we can put on a blockchain, right? Money just happens to be just one of them, okay? Now, the reason why blockchain might not be getting the quick adoption it deserves is simply because it's going to eliminate fraud. It's going to eliminate corruption, because with blockchain, you can track every single rand that is spent on blockchain, right? Of course, there's a lot of people who don't necessarily want that, okay? So blockchain is simply a distributed ledger, right? It's a record, it's a database. But this database is not populated by one person. It's populated by a group of computers, right? Of which they need to agree on what transactions should actually be put on the blockchain, because whatever is put on the blockchain, it is there permanently. It is put together, using cryptography and can never be changed, okay? That is why it's called immutable, all right? So you can have a centralized blockchain. You can also have decentralized blockchain. So we'll basically talk about this, even more. What I do want to mention is that within the Bitcoin blockchain, every 10 minutes, so if I'm sending Bitcoins to Andiswa, Andiswa is sending Bitcoins to Undokozo, Undokozo is sending Bitcoin to someone else, all those transactions in that 10 minutes, they are put together in what we call the mempool, right? Now, in this mempool, they wait for the miners to pick up transactions and then verify those transactions and put them in the block. So if you see this block here, it will be filled with all the transactions that happen within that 10 minutes, right? That are put into that block. And those transactions are there permanently forever, okay? And they are interconnected with all the previous blocks, dating back all the way to the Genesis block, which was the first block of Bitcoin ever to be mined. Okay, so each and every block has got transactions that are timestamped. Every block is linked with the previous block. So everything is 100% transparent. So when people say Bitcoin transactions are actually anonymous, that is not true. They are pseudonymous. What does that mean? It simply means that we can track every transaction, but it's just that it does not have Andiswa's name. It does not have Andy Siwa's name. It doesn't have my name. It just simply has a wallet address and a transaction hash, which basically gives you the details of what is in that transaction. So tomorrow, what we'll do, we're actually going to go over this a little bit, just to rehash, and then go over to the next session, right? I'm going to stop sharing. I'm going to stop recording, only if I can find it. Okay.